issued by the institute for all areas and for all elements of cost. There is a second need. In many areas of standards, there are different set of practices followed by the industries over the years. And these practices got recognized by the government through various rules, cost counting record rules, which were announced from time to time in the last 45 years. I'll give you one or two examples to understand. For example, when sugar cane is produced by a firm sugar company from its own farm, they have their own sugar cane farm, they are producing the sugar cane. The standard, the cost counting record rules said that they have to be priced at the market price. Now, how this market price is determined? It is announced by the Government of India as a fair and remunerative price, and in some of the state governments, it is also announced as a state advised price. So this is where the rule said that even if you are procuring the sugar cane from your own farm, the sugar cane has to be priced at the same price announced either by the Government of India or by the respective state government, which is a market price. And the profitability of profit or loss of the farm activity has to be directly attributed to the profit and loss account. So therefore, this became a rule or a practice. Same set of practice, I'll give you another example. When wood is produced by a paper factory from its own forest, there the rule said in the past that it has to be priced at cost. It will not be priced at market price. So therefore, this practice continued to remain in the paper industry, that the wood or bamboo produced from the own forest, they have to maintain proper cost records and they will have to be priced at the cost. A third set of practice came for the goods produced for captive consumption, which are excisable goods, where the excise law said that they had to be priced at the assessable value, which will be cost plus a fixed margin, which earlier in the days it used to be 50% and it was later amended to 10%. So as of today, it is cost of production plus 10% margin. So there are different set of practices. So there is a need to also capture those practices which have been in the past recognized by the law in different type of industries. So therefore, there was a need to issue the generally accepted cost accounting principles, also including those practices which have been adopted by the, which has been recognized by the law under various rules announced in the past. This was a major need to issue the generally accepted cost accounting principle, GACAP. We are familiar with the GAP, generally accepted accounting principles of any country. Nowhere in the world has ever been documented the generally accepted cost accounting principles and practices. This is a unique effort taken by the Institute of Cost Accountants of India, and I really congratulate the Institute for this effort, and I am sure that this is going to be a document to be adopted by various economies across the world. I remember a day when the president of IFAC visited the institute, and he was given the presentation on the cost accounting standards and the GACAP. He also made the statement that this is a unique effort of the Institute of Cost Accountants of India, and they said that the IFAC would be prepared to look into those standards and make it universally acceptable by all countries in the world with whatever little modifications, so that they can have a globalized language and the globalized principles. Now, this was the approach, and they really complimented the institute. I'll just give you the structure of this generally accepted cost accounting principles. This document, what does it contain? It gives a brief introduction, the objectives of this document. It lists out the scope of application, the nature of content and the format, conceptual framework, definitions of various elements of items of cost, principles applicable to the different elements of cost, presentation and disclosures, conclusion and the applicability of this cost accounting practices. Now, one may wonder that if in many areas the institute has already issued the cost accounting standards, what is the need of including those areas in a GACAP document? Gentlemen, this document primarily says that in those areas where the standard has already been enunciated, where the standard has already been issued by the institute, this document will not override that standard. So the standard will override this document. It has replicated, it has reproduced the same standard principles in the respective element against respective elements of cost. Only where the standard has so far not been issued, in those areas, a certain set of principles and practices has been listed against the principles applicable to various elements of cost. In those areas, subsequently, if the institute issues a standard, the standard would prevail. The principles laid down in GACAP will not prevail. The standard is the final document to be followed. Till then, the principles laid down in the GACAP document will have to be followed as by all entities and by all practicing professionals in the country, as the government has mandated applicability of the cost accounting standards as well as the applicability of the GACAP. I'll just give you a few areas of where it really talks about the very interesting things in the GACAP. For example, in the conceptual framework, it has listed out important 6 principles in the conceptual framework. The first principle laid down is the focus on drivers of value. What it says, that the cost statements should focus on the various drivers of the cost, revenue, profits, and the value. So therefore, when you draw a principle of cost, when you lay down a standard, the focus of laying this principles focus should be on the various drivers of the value. The second principle laid down is the cost for a purpose. Now, when you recognize the principles, you have to understand that a cost statement has to be drawn with a particular purpose. I'll give you an example. That a particular purpose is to file a cost statement with a regulatory body. With duly attested cost statement has to be functional. Now that may be required, filed according to the requirement of that particular regulatory body. Take a practical case. In the case of certain fertilizers, Government of India gives a subsidy based on the cost of production of that fertilizer. It's not a fixed subsidy, it's a variable subsidy depending upon the cost of production of that fertilizer. Now necessarily the regulatory body, which is calculating all this cost and calculating the component of subsidy to be given every year, they need cost data in a structured form. So that cost data, that statement is a specific purpose cost statement drawn for the purpose of filing with the concerned regulatory body. We take a separate example where a general cost statement has to be drawn for an internal MIS to the different levels of management in the organization. A deputy manager, a manager, a top CEO or the board, they have to look at different areas of cost statements for a different level of decision making process. There the purpose may totally differ. So therefore we have to draw the principles keeping those purposes in mind. The third principle is the reality different. Every costing principle, every cost statement has to look into the real business model of the enterprise. It has to have a relevance with respect to the respective business model. Then the next principle, the materiality and the cost effectiveness. When we identify a cost, when we prepare a cost statement, we have to keep in mind that how materially important is a particular element of cost. For example, in a particular company, the research and development cost is very negligible compared to the total turnover or total size of the company. Take the size of the company, say $20 billion, and they are spending a few $1,000s in their research and development. So